Hi, my name is JP Gervais. I'm the Chief Economist at Farm Credit Canada, and I'm here in Regina in our corporate office to talk about our 2018 FCC Farmland Value Report. My plan today is actually pretty simple. I'm going to be reviewing the 2018 results, providing a brief overview of what is in the report, but there's a lot to unpack in this report, so I would encourage you to go to our website at fcc.ca/farmlandvalues to get more insights and more analysis on the results. I will also provide a little bit of a discussion on some of the economic drivers behind the farmland market, and finally provide a little bit of a forward look at what is to be expected for 2019. Now, moving on to our report, just a brief word on the methodology. We basically appraise a set of benchmark properties on an annual basis from year to year, and that gives us quite a bit of consistency in our results, and allows us also to provide an analysis from year to year on how the trends in the marketplace are changing. And we supplement that analysis of benchmark properties with a data set of sales of farmland. So it's quite a robust process that we come up with to provide the trends in the marketplace for farmland values. On to the results. Well, the 2018 average increase in farmland values was 6.6% in Canada. That's lower than what the average increase was in 2017 at 8.4%. For most of the provinces, all but one actually, British Columbia being the exception, most provinces have actually recorded a rate of increase in farmland values in 2018 equal or lower than what was recorded in 2017. British Columbia, as I said, being the exception, recording an average increase of 6.7%, and whereas in 2017 the average increase was between 2 and 3%. We don't have necessarily enough transactions to assess the market in Newfoundland and Labrador, so this is why you're not seeing any type of results for the province. But just to be clear, farmland values overall continue to increase, but at a slower pace when you compare 2018 to 2017. The exception when it comes to increasing farmland values is in Nova Scotia, which recorded an average decline of 4.9%. Now, providing a little bit of an overview of the country and how it looks, we're going to start off on the eastern part of the country and looking at Atlantic provinces. Quite a bit of diversity in the results. We have a total of 51 regions across the country. And so you're seeing that even within a province, the different regions can look different than the actual average of the province. So if I take New Brunswick, for example, you're looking at the western part of the province that recorded an roughly 8% increase in average farmland values for 2018, whereas the southern part of the province recorded a decline of more than 4% on average in farmland values. And the diversity of the results here for the Atlantic provinces, I think, speaks to the diversity of agricultural production in that province. So you really have to look at the results, look at the average in the context of what are the drivers for that province, for this sector, for this region. Now, moving on to the central part of the country with Quebec, Ontario, and parts of the prairies with Manitoba, where again, we're seeing a lot of diversity, a lot of different regions that are actually quite different than the provincial average. One of the things to remember is that around 20%, close to 20% of the regions that we have out of the 51 that we assess and report on, close to 20% of these regions actually showed no increase or a very small increase in farmland values on average for 2018. On the opposite side, 8 regions out of the 51 actually recorded an increase higher than 10%. Again, lots of diversity, lots of different drivers that have an impact on the region. And even within a region, you have to be careful about not necessarily taking the average for granted and actually looking beyond the numbers and beyond the average to understand what's going on in the marketplace. And if I continue to tour and look at the rest of the prairies, Saskatchewan, Alberta, and the West Coast with British Columbia, again, some of the drivers will have a different impact on what the numbers actually suggest. So if you look at Alberta, for example, strong demand for irrigated land in the southern part of the province, which resulted in a strong increase on average in the southern part of the province in Alberta. One thing to be thinking about as well is that overall, if you look at the overall transactions that we have in our database, the lower valued land increased at a slightly faster pace than higher valued land. So in other words, the land at the top end of the market is not increasing as fast as the land and the bottom half of the marketplace. Again, a little bit of context around some of those numbers that you really have to be careful not to take the average and apply that across the board, coast to coast, or even across a province, and then really be careful about what the specific trends are within the province. So speaking about some of the economic drivers around farmland values, farm income to me stands out as the #1 driver to think about when it comes to farmland values. So what you have up on the screen are crop receipts for the province of Saskatchewan. We really see a significant increase in gross income for crops in Saskatchewan, starting from 2007, perhaps all the way to 2016, where the province was able to add, on average, $600 million worth of gross income on an annual basis on average. So for 10 years almost, you're basically adding $600 million worth of gross income at the farm level just with crops in a province like Saskatchewan. So that's very significant growth that we have not seen before. So that growth in farm income resulted in a growth in the price of land. And what really matters from a standpoint of understanding the overall market and affordability of farmland is to understand the relationship between the price of land and farm income. And so what you can do, and what I'm going to do in a second up on the screen, is to look at the average price of land on a per acre basis and compare that to, for example, a standard rotation of wheat, canola, pulses, and look at gross income based off the average yields and average prices for those commodities. And you can see on the screen that if you do this, look at the price of land over income, you can see that on average, this has been like 3 times, the price of land is 3 times the gross income you can get on an acre of land in Saskatchewan. So that's the dotted red line you're seeing up on the screen. When income started to climb real fast around 2007, you see that this ratio is dipping a little bit below the average. The price of land did not adjust right away to the growth in income that we were seeing in the marketplace. But the land price actually caught up to this growth in income, and you're seeing this blue line, this ratio of price of land over income starting to climb up to the point on the far right in 2018 where that ratio actually exceeds the average of the last 15 years. Now, is this a problem? I'm going to argue in just a second that perhaps it is not necessarily a problem, but certainly an area to monitor going forward, because ultimately income trends and the price of land should actually work and move together. Now, just to provide another example in different parts of the country, focusing on Ontario, where you see that crop receipts actually increased as well real fast, maybe in a shorter time period than what you saw for Saskatchewan, 2007 to 2013, and then crop receipts leveled off somewhat and still very strong, but yet you haven't seen much of an increase really starting from 2014 and onward. Now, what's the relationship between gross income and crop receipts in Ontario with respect to the price of land? Well, you see a similar trend. You don't want to compare a province with another province. Really, you have to look at a province with, where it's at in terms of that ratio and where the average has been over the last 15 years within a province. Those cross-provinces comparisons are not necessarily what you would like to do with a tool like this to assess the strength and the value of land in a province. But again, the story is pretty similar to what you had in Saskatchewan, in which you saw a ratio that was under the average for a little bit, starting off in 2008 and 2009. But where you're seeing up now with the results that we have in 2018 is that the price of land has increased faster than what income growth has been for crops, assuming, again, a standard rotation of corn and soybeans and average yields and average prices for a typical grain operation in Ontario. Well, what can we expect out of 2019? Because really now we're in a situation where land's a little bit more expensive in relation to income than what it's been for a little bit. So what can we expect? It matters to, what matters to me is farm income first and foremost. And on that basis, some of the trade tensions that we have currently in the marketplace with regards to getting canola into China, getting Canadian pulses into India, durum wheat into Italy, are going to have a big impact on farm income in 2019. So this is certainly some area to monitor in terms of the market access that we face in these countries. Some of the trade tensions as well that exist between, let's say, the United States and China with regards to soybeans are also going to have an impact on commodity prices. Likely, in my opinion, to see more volatile commodity prices going into 2019, and that ultimately is going to have an impact on farm income for 2019. Interest rates, I would say, are a very significant driver as well, perhaps the second most important behind farm income. And to have a valuation of land currently that, with respect to income, that's a little bit higher than what historically the average has been, may not be too big of a concern right now, given that we have low interest rates in Canada. In fact, interest rates have been declining all the way to 2017. What you have up on the screen, the blue line, is the average borrowing costs of businesses in Canada. Reached an all-time low in the spring of 2017, and then we had 5 rate increases from the Bank of Canada that pushed up borrowing costs. And so you would expect with higher interest rates to see the demand for farmland to soften a little bit. But what we've seen is that also the supply of land available in the marketplace is very tight. And at the end of the day, it's a matter of supply and demand. Demand perhaps is weakening a little bit with higher interest rates and farm income that's leveling out. Producers are making more strategic investments in terms of finding land that's valued perhaps in not at the top end of the market, but maybe lower a little bit than what the average would be, and perhaps trying to get more productivity out of that land, because there's still an incentive for producers to expand, gain efficiencies, scaling up, and given that there's a strength for the demand of commodities in the marketplace, but the demand may be a little bit softening, whereas supply remains very tight. In fact, we recorded fewer transactions in 2018 in our database than what we recorded in 2017. So that speaks to the limited supply available of land in the marketplace and is quite supportive as well of land prices overall. We do not expect interest rates to increase in 2019, and that should provide a bit of support of farmland market as well for the year. I would also suggest that we should keep an eye on the value of the Canadian dollar. This is a really big driver of farm income in 2019 and the years prior. $1 at 75, which is our forecast for the year 2019. $1 at 75 cents US is actually pretty supportive of farm income in Canada. Anytime the dollar moves up, you have to pay attention to margins, because that would tend to lower profit margins, especially for grain and oilseed operations that see a lot of the prices that they have or that they receive being first and foremost determined in the US market. So when you're converting these prices at a less than favorable exchange rate, that can perhaps have an impact on farm income going forward. But we do believe that the dollar should stay in that 75-cent range for the remainder of 2019, and this would be supportive of farm income for the rest of the year. And we also don't want to forget about other drivers in the marketplace. The proximity of farmland to urban centers is one of the key determinant or key drivers as well in some regions of farmland values. So that can have an impact as well that producers and farm operations need to consider as they're trying to expand. Location really matters. Other commodity markets also matter. Oil is another example where oil prices can have an impact on the wealth in some regions and hence on the demand for farmland. With oil prices moving up, that tends to create a wealth effect that triggers a little bit stronger demand for land, whereas the opposite is true as well with oil prices being or softening a little bit, that tend to lower wealth and also lower the demand for land. Other sectors beyond crops, if I'm thinking of livestock, would also have an impact on the demand for farmland. So all of that would really have an impact, and it's really about making sure that you take the information you have and put it in the right context for your operation, given your location, given your sector of activity, and making sure that the numbers fit for your operation. Bottom line, I do believe that the long-term outlook for agriculture remains positive. But we also don't want to downplay the fact that we are faced with a few headwinds right now in the marketplace, mostly related to market access issues. But the underlying factor that makes me positive when it comes to the future of ag is really the strength of the demand for Canadian agricultural commodities. And that really has not changed in the marketplace. Yes, we do have a few issues to sort out in terms of market access and being able to export those commodities. But the bottom line is there's a very strong demand both for the livestock as well as crops, very strong demand for Canadian agricultural commodities. We could see a little bit more of a volatile year in 2019 with more volatile commodity prices. And risk management in that case is a big component of your overall business strategy. And so for the entire month of March, for example, we featured on our website at fcc.ca in the Ag Economics section, we featured financial tools and financial ratios to help with risk management on the financial side. And I would argue that risk management on the marketing side, production side as well, are all strategies that farm operations needs to consider to be successful in 2019 and beyond. On this, I would encourage you to go to our website, fcc.ca/farmland values, to get more insights and analysis on our 2018 FCC Farmland Value Report. Thank you.